Let's talk about SoFi. We barely started 2025 and people are already freaking out because SoFi stock did go down by 10% or so in one day because, guess who, KBW came out with a bearish report on the stock. Valuation is stretched, the stock is gone up too quickly. People think that, oh, it's because of the new president, the new administration, that's going to help the company extremely well, blah, blah, blah. Lots of points have been made. Now remember, this is the same firm that 12 months ago was also quite bearish on SoFi and also had a ridiculously low price target. Well, we know what happened, right? We know that SoFi right now, at the time of making this video, stock is back closer to $15. We're at $14.84. Also remember, in the last 3 months, SoFi stock is up close to 90%. Year on year, the stock is actually up closer to 80%. I know it shows here 53.7%, but that's only since January 2nd, 2024 and not January 3rd. So closer to 80% growth. So we've gone up quite a lot since the previous KBW report, and we've gone up quite quickly, well, in the last 3 months. So, okay, wow, one day when the stock goes down 10% is not the end of the world. And yes, in my opinion, it was an overreaction. So let's discuss this one in the video. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, 2 extra things here. 1, if we look at fiscal 2026, the current EPS expectation sits at 41 cents. We know that management expects at the midpoint 67 cents, just so we're clear. If we go and look at the current average analyst price target, that sits 22.28% lower than the price we're at today. And so if we look at a couple of things that analyst said, first of all, he lowered his rating to underperform from market perform, but raised the price target to $8 from $7. Wow, incredible. The analyst noted that shares climbed 57% in 2024 and more than doubled since September, crediting those gains to optimism among investors about high-growth fintechs after the election. The analysis indicates the valuation is overstretched across a wide matrix of multiples. While SoFi has offered a long-term forecast for earnings per share in the range of 55 cents to 80 cents, reaching that 2026 target will require a significant pickup in revenue with strong operating leverage. He characterized the path as long and difficult. The analyst also pointed to management's long-term target for a return on average tangible common equity between 20 to 30%. Only a handful of chartered banks can manage to sustainably generate returns even in the 20% range. And so let's talk about what has happened since, well, last year's report. KBW, this is for revenue fiscal 2024. Q1, they said SoFi would generate $550.5 million. SoFi generated $580.6, so the difference here, $30.1 million on the upside for SoFi. Q2, the difference there also close to $29 million upside for SoFi. Q3, they expected $586.6 million. SoFi came in at $689.4 million. The difference, $102.8 million. And then for Q4, they expect $593.8 million. The current expectations are that it would come at around $675 million. That's, again, a difference here of $81.2 million to reach SoFi's midpoint guidance, which we know that SoFi usually beats their own guidance, right? If we look at what has happened, first of all, the guidance has gone up. Prior 2024 guidance and the original one, we went from 14 to 16% year-over-year growth to now 22 to 23% year-over-year growth. Now, if we add up and we want to reach the top end of the guidance, there is $683 million left. Consensus numbers were $677 million. So, yeah, even compared to the consensus numbers, KBW is far behind. Up next, we have adjusted EBITDA. It's even worse here. Q1, the difference was $31.2 million. Q2, $16.4 million. Q3, $55.9 million difference between KBW and SoFi. As for Q4, the difference right now, the current expectations, $46.3 million difference. And so the end result would be a difference of close to $150 million miss on adjusted EBITDA. So yeah, I don't know why we're taking these guys seriously. I just don't understand. Then for EPS, just look at this. They expected SoFi to actually have a loss in fiscal 2024. Right now, it's already at 7 cents. The expectations are for Q4 to be at 4 cents, which would mean that SoFi would be at 11 cents for fiscal 24, which means here the difference is 14 cents difference. By the way, KBW's 2026 EPS is at 36 cents compared to SoFi's 67 cents. So again, I ask myself, why are people freaking out when they talk about SoFi? They literally know nothing, because, I mean, even if they did know something, you would not have seen such a big difference in EPS, in adjusted EBITDA, and in revenue. It's just ridiculous. Then when we look at their annual revenue CAGR for until 2026 compared to SoFi for lending, financial services, and tech platform, KBW thinks that lending will grow at 5%, financial services 46% compared to 50%, and tech platform 14% compared to 25%, which is what SoFi expects. So yeah, here again, are we going to put our money on what KBW says, or are we going to still trust SoFi management that has managed to, well, go through a couple of years of lots of headwinds and still beat their own targets? I think the answer here is quite simple. Last couple of things here. They finished by saying, even if SoFi generates a return on equity of more than 20%, which is likely unachievable until 2028 at the earliest, the firm projects 46% downside for shareholders, meaning the stock could lose nearly half its value if market conditions trigger a drop in price. So let me remind you what management told us with regards to that 2026 target. On the profitability front, bridging down to GAAP EPS, they expect to generate 30% EBITDA margin by 2026 and 20% GAAP net income margin by 2026, and stock-based compensation is expected to be high single digits as a percentage of revenue. So if you put all of those CAGRs and the profitability target into place, that gets you to your 55 to 80 cents GAAP EPS. Now, they also said the following. For the 2023 to 2026 time period, they see 20 to 25% compound annual revenue growth, assuming no meaningful change in the macro environment. Okay, macro has already changed. No significant new business launches or acquisitions. We know that that's changing, such as small and medium business checking and savings or small medium business lending, a broader asset management business, insurance, a broader credit card portfolio, new technology verticals for the technology platform business, or new geographies. So yeah, quite pessimistic. The 20 to 25% compound annual revenue growth from 23 through 2026 assumes a compound annual growth rate, as we've seen, 50% for financial services, mid-20% for tech platform, and mid-teens for the lending segments. So again, my question here is, do we trust management more, or do we trust that firm that has been wrong on SoFi time and time again? I'd also like to point out that SoFi themselves said that they see 20 to 25% EPS growth beyond 2026, reflecting both the continued growth of the core business they've just described, plus the added benefit from new business lines launched in 24 to 26 time period that begins to scale and impact beyond 2026. Remember last quarter, and this is going to be a very, very exciting segment of the company with regards to fee-based, capital light, and low-risk revenue sources. They said combined fee-based revenue made up $174 million, or a quarter of their adjusted net revenue in Q3. This revenue grew by 65% year over year. On an annualized basis, that's nearly $700 million in revenue. This progress was driven by a record quarter in their loan platform business, which totaled $56 million in fee-based revenue. That is up more than 5x year over year, as well as strong growth in interchange, which is up 2x year over year. Again, until management shows us any sign of incompetence, I'm not going to start to panic or believe anyone else other than Anthony Noto and his team. One last thing here is that KBW did compare SoFi to two other companies. The companies are called The Bancorp Inc. and Pathward Financial Inc. as well. They compared SoFi to those companies. Now, if we look at the growth rates between SoFi and these two companies when it comes to revenue, what can we see here? Well, we can see here something quite clearly is that, well, the growth rates are not to be compared. So if they want to put the same multiples of those two companies on SoFi, well, then I would expect those companies to grow as fast as SoFi. Something else here, if we look at gross profit, the comparison here is just insane. Gross profit, Q3 2020 up until the last quarter. Cash, which is the first company, grew 63.81%. The other company grew 86.66%. Oh, SoFi, 593.61%. So, why are we comparing a Ferrari to a Citroen, right? I just don't understand this. I just don't understand. I mean, what's the point of releasing these notes? To get some publicity? Maybe it worked at first, but now it's going to get very, very bad publicity because the retail community are not idiots. We're going to cover this time and time again and call them out on their BS, their lies, and their, well, faulty reports since they've been horribly wrong in the last 12 months, not just from a stock price perspective, but from their own projections as well. The financial performance has just been so much better from SoFi than what they thought would happen. So, yeah, in short, I still think SoFi is a great company to have in 2025. That's why I put it on the list for best fintechs to own in 2025, even after the stock has run up quite a lot. I think this company will still continue to grow quite quickly. It will become more and more profitable. Yes, I know if you look at forward PE right now, it's quite high compared to other bank stocks. SoFi is not a bank, it has a bank. SoFi grows much quicker than banks as well. So PE is something that we'll have to look later down the line. So that's all I've got to say. Relax and trust Anthony Noto. Do share your thoughts down in the comment section below. Like, subscribe, do all of that, and I see you all in the next one. Bye-bye.